It wasn't long ago when I had no idea about how the stock market works. After joining the virtual stock exchange game on Investopedia, I have a deeper understanding of how the stock market works in the real world. So let me give you a rundown of my portfolio on Investopedia. Currently, I have 8 stocks: Pepsi, Gap, General Electric, Twitter, Yahoo, Alexion Pharmaceuticals, Google, and Nike. I have a return on investment of negative 2.96% and an average beta of 1.12. So I bought the majority of the stocks in my portfolio from a behaviorist viewpoint, which means that I bought the stocks because I like the company. Later, I was introduced to a better way of analyzing stocks, and that is the fundamental analysis. For the fundamental analysis, I used the Nasdaq Dozen tool. With the Nasdaq Dozen, I was able to look at the income statements of the company. So by doing a fundamental analysis, I bought Pepsi and Nike. After close observation, I realized that it was Pepsi and Nike that was actually helping me make the most money. So what I learned is that it's important to do research of a company before actually investing. After all, information is the basis for decision making. So I have a return on investment of negative 2.96%, which is not a good sign. I have an average beta of 1.12, which means that my portfolio is more volatile than the market. And I believe this is because my portfolio is not diversified. I have 3 stocks: Google, Twitter, Yahoo, that are all from the same industry. And the best way to minimize risks and maximize returns is diversification. So I'm hoping to take what I learned from this virtual stock exchange game and utilize it in the real world.